Welcome back to another roundtable. My name is Adam. With me, Rusmin.
Hello.
Victor.
Hi everyone.
Thank you so much for joining us. Today we're going to do a quick update on Singapore banks. So they recently released their FY 2022 results.
Yep.
And all of them have increased their dividends.
Yeah, but the share price decreased.
Okay, so we're going to find out what is happening, because usually when dividends go up, people are happy.
Yep.
But the share price has come down over the past month or so. So maybe just a quick update of their FY 2022 results.
Yeah, so if you look at the rising in terms of the interest rate, so the net interest margin of the banks have been increasing very significantly, right? So you can see that their net interest income for DBS actually went up by 74% year on year based on fourth quarter. And UOB based on fourth quarter year on year went up about 53%, and OCBC went up by 60% on the fourth quarter year on year. So all three banks did very well. In terms of the net profit full year, DBS actually went up by 20%, UOB went up by 18%, excluding the one-off expense that they do for the Citi acquisition and the integration, and OCBC actually went up by 18%. And of course, all three banks actually increased their dividend significantly on this fourth quarter, right? So I think Rusmin can talk about the
so I think if you look at the increment on the year to year or quarter to quarter, you compare it to last year, because they actually have a lower dividends, right? Mm-hmm. So, and of course, if you by right, you need to compare with the pre-COVID level. So you look at DBS, pre-COVID, the dividend was about $1.23, and as of full year 2022, the dividends is about $1.50. Okay, so that there is also additional special dividend of 50 cents. Okay, so that increment is actually about 22%. Right. On the other hand, if you look at the OCBC, right, OCBC also increased from 53 cents to 68 cents. Okay, pre-COVID and post-COVID, and that increment is about 23%, 28%, right? And so UOB, it's from $1.10 to about $1.35. So that increment is about 23 cents. Okay, if you strip out the special dividends.
Yeah, I think it's important to have compare results over a period of time.
Yep.
Yeah.
Because year to year things go up and down. So the dividends were a bit lower because of the COVID and pandemic, But you compare it to pre-pandemic levels when life was normal.
Yep.
Yes.
So now we're back to normal, right? So and things have gone beyond that.
Yep.
Right. So the dividends have increased.
Yeah, I think the reason why the dividend increased significantly, especially for like let's say OCBC or maybe UOB, I think both of them actually in the past they tend to pay less than 50%, right? But right now UOB actually paid more than 50%, and they have a target by 2026. They want to maintain at least 50%. But OCBC this time around they pay about 50, rounding up to about 54% payout ratio, and they mentioned that they're going to maintain 50% minimum.
All right. So there's this policy
they actually
in place.
raised, because previously, right, the one that started the 50% trend is actually DBS. That's why we every time see that DBS got better yield because they pay out higher. But now the other two banks, they are also going to pay out 50% moving forward. Right?
All right. So this sounds like good news for dividend investors. I mean, increase in dividends, and then the banks are committing to at least a 50% payout ratio. That sounds good. So why have the share prices come down?
Okay, so I think firstly, why the share price have come down is, I think, firstly, right, the general market is going down right now. So banks is not spared also, right? They are affected. But in general, before this happens, right, I think there's also a few concerns about the banks, right? First is actually the interest rate hike could be over. That's what everybody thinking, right? That the interest rate going to start tapering, maybe this year or maybe early next year, right? But then you look at Fed, few days ago, they actually mentioned that they may want to get a higher hike this time round if, the data coming is still remain hot, right? So the Fed is trying to give an extra surprise right now.
Okay.
Right?
50 basis point.
Yeah.
That's the guess. Right?
Yeah. So they say that may be higher, right? Okay. So to further pressure the inflation and all this, right? But if they were to increase, then that's going to benefit the banks even much more, right? But then I don't think it's a concern, because if you look at all the three banks, they expect the interest rate to remain at the same level, about to the peak, right, all the way for this whole 2023. The tapering won't happen. They expect it won't happen in 2023. So 2023, I think, is much secure for the banks, right? I think the second concern they have is actually the lower net interest margin that they're going to have moving forward. Because you can see, right, for the banks, right, like DBS, they actually increased the net interest margin of the fourth quarter 2021 was only 1.4%. Right now, it's about 2.1%. Then if you go to look at UOB was 1.6, and right now it's about 2.2%, and OCBC was 1.52, and right now it's 2.31% in terms of the latest fourth quarter 2022 net interest margin. But of course, overall as a group, the net interest margin actually is lower than 2%, but it's on quarter they are increasing, right? And all three banks expect the interest margin to maintain for the rest of 2023, and maybe will pick around 2.1 to 2.25%. All of them got different target, but it's around 2+%. That's the pick, right? So I think for the 2023, the banks will generally still do well because of the high interest rate. But then people are expecting like it's like not so much of a big spike, because compared to 2022 and 2021, there's a big spike.
Interest rates,
Yeah, interest rates, right? So they expect 2023 is not a very big spike, right? But I still think that the bank will continue to do well and they will increase the dividend. There's a high probability that they will increase the dividend. Okay. I think the third reason why there's a concern about the banks is because of the funding costs, right? The funding costs have increased, right? All the banks are trying to fight for the deposit right now. And also, a lot of the monies are flow out to the bonds, right? Your Singapore government bonds, very good yield and all this. So everybody is fighting for cash right now, right? That's why I already mentioned in the previous video that the CASA ratio was high for the three banks, was very good, right? So in 2021, you can see the CASA ratio of DBS was 76%, UOB was 56.2%, and OCBC was 63.3%, right? In the past, right, OCBC and UOB was actually much lower. They always at around the 40+% mark, and DBS was probably around the 60+% mark. But OCBC managed to push up significantly. And I also mentioned that in the previous video that the high CASA ratio was very good for the banks, right? So right now you can see that even though the CASA ratio dropped to DBS 60.3%, UOB was 47.5%, and OCBC was 51.8%, right? It's still much better as compared to the past that they have, right? Because the high CASA ratio help to buffer this. So I think the banks generally can handle this climate. Of course, it's not the first time they are handling also. If you look at in the past few years where there's a spike in terms of interest rate, they also have a slight decrease in terms of the CASA ratios and all this, but they also managed to do well during that type of climate, right? So I think it's not much of a concern for the banks. Yeah.
All right. I think I just want to give a bit of context. When I said the share prices dropped, let's say, for example, DBS, it was a high of 36 in February.
Yep.
Now, as of this time, it's recording about 33. So it's like a less than 10% drop. But, they're doing well.
Yep.
And so this little bit of a drop, I think some investors might go, hey, maybe it's a nice pullback.
Yep.
Maybe I have a look at it. What are the valuations of the three banks at this point?
Okay, so if you look at DBS in terms of the price to book, right, they are still traded above their one standard deviation, right, above the average, right. They used before all this happened, like they are about 2 standard deviation. They hit the 2 standard deviation above the average, but right now they're about 1.5 standard deviation above the average. And the yield they get based on the latest dividend, right, full year dividend of $1.50. That's about as in regular dividend, exclude the special
dividend.
Yeah.
So that's about 4.5% yield.
Okay.
Right, it's still much higher than a lot of your government bonds that we're having right now, right?
Very close. 4.2,
yeah, but then
4.3.
when I look at the price to book and 4 point something, I think probably DBS is not cheap.
Okay, all right.
Overvalued.
Okay. So Rusmith thinks it's overvalued. Okay.
I'll just be nice, okay? Not cheap.
Not
okay?
cheap. All right.
So I don't think there's a lot of upside for that, right? So let's look at UOB, right? So UOB, he actually, before all this drop happened, he actually hit the 1 standard deviation above the mean for the 10 years, right? But right now it's start to trend down about 0.5 above the mean, right? And in the yield you get based on the latest new dividends, full year dividends, about 4.7%. It looks decent, but I still think that's still not that attractive.
Okay.
Right?
All right.
Okay. So I think the most attractive among the whole 3 banks is actually OCBC. Historically, OCBC have always been moving on the same direction as UOB. I'm surprised that on this climate they are moving not with the same direction as UOB, right?
Okay.
But then they are also the one that increased the dividend significantly in this year also, right? So if you look at OCBC, right, they are traded below the average, 10 years average, right? About 0.5 below PB average, right? And their yield is about 5.5%.
Wow. Okay.
Yeah, so it's much higher than the 3 banks. I think there's still more upside for OCBC as compared to the other 2 banks.
So OCBC is undervalued.
Let
me summarize it.
I mean, 5.5% yield is pretty good.
Yeah, with upside. If the interest rate continue to increase, I think the banks will start to do well. And the dividend we can expect on the next year, the first half, there's a high probability that the banks going to increase the dividends past the current dividend that they are giving out.
Yeah. Again, the price is as of today's of recording, right?
Yeah.
So OCBC is about $12.45. So by the time you watch this, it could be different. So you might want to check, and based on their dividend per share is about 68 cents. You can back calculate what will be the yield based on the time when you are looking at it.
Yeah.
Yep.
Yeah. I think 5.5% yield, I think is pretty attractive. I think if you're a dividend investor, this is something that you might consider if you want to look at the
banks. And
banks.
the banks and OCBC is going to commit 50% payout from now onwards. Right?
Yeah. I mean, the banks have done, all three banks have done pretty well over the past year. It's just that just recently there's a slight pullback.
Yeah.
And the valuations that you've given, OCBC looks the best.
Yeah.
All right. So again, no recommendation to buy or sell anything. Do your own due diligence to check out, what you need to know.
I think at the end of the day, it's not what to consider. At the end of the day, we're looking at the yield. Historically, if you look at the banks have always been increasing the dividends throughout even crisis or non-crisis. Also, except for the 2020 was affected. That's why the dividend dropped, right?
Yeah.
But during the 08-09, the bank actually maintains the dividend very well, right? At that point of time, right? They didn't really decrease that much at that point of time, right? And after that, they have been increasing throughout the years until the pandemic.
Okay.
Right.
Yeah.
And if you based on this, right? The history of the banks, right? You know that there's a high probability that they will continue to pay increasing dividends. So if you look at the yield right now, it's like 5.5%, 5.5%. It's very attractive, right? At the end of the day, when you look at the banks, when they hit the cyclical, as in the peak of the interest rate cycle, right? They usually trade at a very low yield because everybody is buying the bank, and of course that is the time where you think that you may want to switch out from the banks. But if you don't want to switch out, but you look over a long period, you're getting your yield is still
some people may not want to sell. They just want to collect dividends, right?
Because overall, you know that the banks will continue to increase the dividend. It's a semi-cyclic business, but over a long term, they still increase the profit no matter what because they are in a capital business, right?
Okay. Yeah. All right.
Yeah. Again, there's a risk when it comes to investing in banks. Right? They are highly sensitive to interest rate. So if interest rate were to move, the Fed will decide to cut the interest rate for whatever reason, which is highly unlikely now. The bank prices may get affected.
So as with any investment, there are always risks that you have to consider, and whether you are comfortable with those risks. And if you're okay with that, then you can, I guess you can consider it for your portfolio. But for us, we own some of the banks, just to declare that as well. And we like them for their dividends. And then the recent FY 2022 results were pretty good.
Yeah, correct.
All right. So, is there anything else about the banks, guys?
No.
All right. So I hope there's a pretty good update about the banks. They just released their results. Just want to give you an update on that. And all the dividends went up. I think we're all very happy about that. And the recent pullback may give some of you an opportunity to have a look at it. So again, do check out do your own due diligence and check it out for yourself if you want to. So with that, my name is Adam. There's Rizmin, Victor.
Thank you.
Thank you so much for watching this. If you like this video, please hit the like button. Tell us you're doing a good job. Any questions about Singapore banks, put them in the comment section. Any other suggestions you want us to have a look at, we're happy to hear your suggestions as well. And of course, subscribe to our channel. Many more roundtables coming up, and we'll see you around again.